Welcome to Real Estate IQ Wisdom for Smart Moves. We will explore the insider secrets tailored exclusively for Silicon Valley home buyers, sellers, and investors, arming you to conquer the unique real estate landscape. So, without further ado, let's dive into this exciting conversation. Today, we welcome Ami Shah, the founder of Ami Shah CPA. She aims to revolutionize tax planning by integrating innovative strategies and philanthropy, empowering clients to achieve financial prosperity. Thank you to our sponsor, TradeMyHome.com, for their community commitment and for making this podcast possible. Silicon Valley's real estate market faces tax challenges amid soaring property values. Santa Clara County's assessed value spiked by $43 billion last year, fueled by demand for luxury homes and new construction, especially in San Jose. Driven by tech industry workers, property values across the county's 15 cities has significantly increased, often leading to sales well above asking prices. The median home price has exceeded $1.7 million, up 17% from the previous year. Challenging real estate tax planning has even condos and townhomes in San Jose now surpass $1 million. Our host today, Shared Gupta, is a real estate broker in Silicon Valley and brings a wealth of life and professional experience to his role as a podcast host. The following content is only for informational purposes. Please consult a licensed consultant for your specific situation or if you need any specific legal or tax advice.
Ami, welcome to the show.
Thank you, Shara. Thank you so much for inviting me to this show.
Do you have any specific tax advice for home sellers who are holding on to their real estate sales?
We have encountered so many sellers that they want to sell the real estate, but then they're afraid of paying the taxes, right? Because they're into the highest tax bracket. Even let's say they were to pay 20% federal, 3.8% net investment tax, and 12.3 California. That's almost 35%. So they wouldn't want to sell it. They're saying that, okay, 1/3 of my gain or 1/3 of my proceeds are going to go to the taxes. And once they pay the tax and then they pay off the mortgage, they might not have much money to live off. So, and then they would say that, why would I sell and pay the tax on it? But I would say that consider how that transaction fits into your bigger picture. What kind of investment goal it serves? Do you want to diversify if you are holding on to many real estate properties in the same neighborhood or, in the same region? Your risk concentration is higher. Then there are ways that we can design a sale where, you would pay the minimum taxes, defer the tax, preserve the nature of the gain, whether it's long-term, short-term, and then defer it, sometimes come out tax-free. So there are ways of selling the real estate, setting it up in either a charitable remainder trust, deferred sales trust, or installment sale, where you would defer your taxes significantly and still have quite a bit of upside being retained for you to be utilized.
What tax advice would you give to the first-time real estate investors?
Real estate is one of the complicated tax situation, right? Real estate investment could get very complicated. So you want to understand the tax implications of that investment on the very first place. Whether you will be allowed to take the passive losses or not, what kind of entity will it be, what kind of investment return that you were expecting, what kind of taxes you would owe, and what will be the compliance. So you want to watch out for all these things. Another key component to this, the whole entire tax structure or the tax implication would be claiming the depreciation. You want to know how the depreciation will be calculated on this investment. Another thing to look into is compliance. How would this investment be reported on your tax returns?
Right.
Whether you are going to get a K1 from this investment or you have to report it on Schedule E, you need to know that. There are a lot of benefits to the real estate investment. I insist there are a lot of tax benefits to the real estate. Number one, depreciation. There is another one which is called QBI deduction. So you get to deduct 20% of net rental income as a deduction, and you don't pay the tax on that.
Right.
There is another, there are bonus depreciation, as mentioned earlier. And then I would say that on the sale of the property, you pay a little bit of the depreciation recapture, but the most of the gain is long-term capital gains, which is a preferred tax rate compared to the ordinary tax rate. So these are the items that I would advise you on, that keep the detailed records, understand the tax implications, and claim as many deductions as you are legally entitled to.
How has the tech industry impacted real estate investment strategies in Silicon Valley?
I would say that tech industry has really enhanced the real estate strategies or investment strategies. There are so many different ways now that one can invest into real estate, and then there's no threshold to the amount also. If you have $5, you can invest in $5. If you have $100 or $1 million, you can invest that into real estate. The demand has gone up also, and the properties have appreciated quite a bit because of the tech industry being here, right? Any property that you see in the Bay Area has appreciated significantly, maybe like twofold, threefold, or even fourfold or fivefold. I would say their appreciations are really good, so people are buying and selling constantly here in the Silicon Valley. I have seen so many of my engineer clients who have bought and sold real estate and then taken the advantage of either lower tax rates on the long-term capital gains, or they have done a 1031 exchange, or consistently selling your property 2 years after considering that to be your primary home. Many of my clients change their primary home every 2 years and take the advantage of the $500,000 exclusion that law allows.
Worried about the dilemma of selling first or buying first? TradeMyHome.com, powered by Your Home Sold Guaranteed Realty, has the solution. With our guaranteed 24-hour cash offers, you won't risk owning 2 homes or being homeless. You can buy first and sell later. Are you upgrading or downgrading in the next 3 to 6 months? Text PAIR to 408-740-7400 for a free and no-obligation professional equity appraisal report. For more information, visit TradeMyHome.com or call 408-740-7400. Remember, at TradeMyHome.com, your home is sold guaranteed or we'll buy it.
And how do you stay ahead of ever-changing tax laws?
Good catch, Sharad. The tax laws are ever-changing, and it has been a roller coaster ride since COVID. And I am consistently spending 50% of my time studying what are the new guidelines coming up, and then what are the interpretations for those, reviewing the analysis of the tax policies and the tax laws, I would say, and then also connecting with all the industry professionals, what they think about the new changes. Recent example was ERTC credits. We claimed the ERTC credits almost way ahead as soon as it rolled out. And now there's so much of fraud going on with the ERTC credit that IRS has stopped processing the claims. Our office has processed over 500 applications on employee retention credit before even the tax force started. So we are trying to stay ahead in the game all the time. And I devote quite a bit of my time studying and then understanding what can be claimed. There was another example of pass-through entity tax election that just came out like way late in 2021, where the pass-through entity owners can pay the state income tax ahead of time and claim the deduction on the federal level. Our office was so proactive that all our clients took advantage of the pass-through entity tax election in 2021 and onwards. So in terms of ERTC applications, we were ahead In terms of past entity tax elections, we were ahead. Our office puts in a lot of time in research and reviewing that what are the best opportunities of tax savings available to our clients. So we devote quite a bit of time bringing up the innovative solutions and latest and greatest to our clients.
How can real estate investments be integrated into retirement planning?
There are very, very innovative and I would say that a charitable way of incorporating the real estate into the retirement planning. One of my favorites is charitable remainder trust, where, you can continue to get, number one, you can sell this real estate after putting into the charitable remainder trust without paying any tax. And then continue to get the tax return on investment year after year, and then take out fixed income year after year with very minimal tax on it to it, right? If you were to just sell everything up front and then pay the tax and then invest it, you would get 2/3 of the proceeds. But if you were to put it into the charitable remainder trust and then take 5% year after year, the investment continues to grow tax-free and you pay very minimal tax. So that is one way of incorporating the real estate into the retirement planning. Another way that real estate can fit into a good retirement plan is investment into an opportunity zone, where you can defer the tax and then that investment, if you hold it for 10 years, the gain on that investment is completely tax-free.
I see.
So, there are a lot of opportunity zones investments available nowadays. There are publicly listed also where you can invest your capital gains. So the number one advantage is you defer the tax on the capital gains till 2026. And then the new capital gain on that investment is tax-free if you were to hold it for 10 years. And then one of the very interesting way that we're providing our clients a solution is that we're combining that opportunity zone investment with solar credits.
I see.
So upfront, you take the solar credit. Second, you take the upfront depreciation. And the third, you don't pay the tax on the gain if you hold it for 10 years. So your return on investment is more than 200%.
What sets your firm apart from others?
What sets our firm apart is that I have a master's in taxation as well as master in accounting. So I understand in and out of accounting as well as tax. We design or structure your accounting and taxes in a best possible way so that, you pay the minimum in terms of taxes and you have the good records and you have made the right elections and you avail the best opportunities in terms of tax savings. We are always focused on the ROI. That, if you're always focused on delivering the best value, but we're always focused on delivering the best value, right? Whether it comes into the tax planning strategy or getting you a right structure in place or associating you with the right partners like estate planning attorney or financial advisor. We're always on your side trying to give you the best solution.
Thank you so much, Ami, for being part of our show. Keep up the good work and let's stay in touch.
It is my pleasure, Sharad, to be here on the show, and it was a fun having conversation with you.
For the next episode of Real Estate IQ, featuring Maggie LeBranch, an accomplished associate attorney specializing in estate planning, trust, and probate law.
All right, well, I'm Maggie LeBranch. I'm an attorney. I've been practicing law for about 15 years now.
With her deep expertise and empathetic approach, Maggie guides clients through the intricacies of estate planning, ensuring their real estate assets are well managed and their familial wishes are honored.
Although the firm has been with Santa Clara County for over 40 years, and we primarily focus...
Check out our full episode on Tuesdays at 5 o'clock Pacific and 8 o'clock Eastern on YouTube and Apple Podcast. Thank you for listening to the podcast and acknowledging the wisdom of smart moves in real estate in Silicon Valley. Please share this episode with a friend, subscribe, and leave us a review on Apple Podcasts or wherever you listen to podcasts at Real Estate IQ. Thank you to our sponsor, TradeMyHome.com, for their client commitment and for making this podcast possible. If you're considering buying or selling a home, visit TradeMyHome.com. Until next time, remember to stay ahead in the real estate game.